Welcome to the Explainer. Today, we are talking about the absolutely essential consistency checks you have to perform before an SAP/4 HANA Finance migration. Getting this part right, it's the difference between a smooth takeoff and a project that completely flames out on the runway. So let's just jump right in. Before you even think about kicking off a multi-million-dollar project like this, you've got to know where the biggest landmine is buried, right? So what is it? What's the one thing that trips up even the most seasoned project teams? Yep, there it is. The number one culprit is already hiding inside the very system you're trying to leave behind. See, the new S4HANA architecture, it's a thing of beauty. It's incredibly powerful, but it is way less tolerant of all the little errors and mismatches that your old ECC system might have been happily ignoring for, I don't know, years, maybe even decades. So what's the fix? Well, you can think of these consistency checks as the mandatory, absolutely non-negotiable pre-flight check for your brand new jet. They are a deep, forensic dive into your financial data. Skipping this step? It's like telling the pilot, nah, don't bother checking the engines, let's just go. It could literally lead to catastrophic failure mid-flight. Okay, so first things first, we have to check the core integrity of your financial data. And if we're going to stick with our plane analogy, this is like inspecting the very fuselage of the aircraft, checking all the wiring, making sure the core flight computer is solid. We have to know the basic structure is sound before we go any further. All right, so this first report, RFNDX, this is your front line of defense. So what's it actually doing? Well, its job is to compare your summary index tables, think of those as the table of contents for your financial books, against the actual detailed transaction line items, which are like the chapters themselves. It digs through all of your fiscal years looking for anything that doesn't add up, like a missing document header. Any error it flags is a sign of data corruption. And let me be clear, fixing these isn't optional, it's mandatory. And this right here, this is the pattern you're going to get very, very familiar with for all of these checks. It's a simple but absolutely vital loop. You run the check, you fix the errors it finds, and then you run it again. And you keep doing this until that report comes back completely 100% clean. Zero errors is the only acceptable answer. Okay, let's move on to the next phase. We've confirmed the basic structure of the plane is solid. Now we need to make sure all the individual systems, the engines, the navigation, the landing gear, are all reporting the exact same status back to the cockpit. And here's the bottom line. Your general ledger, that's your master record, it's the main dashboard in the cockpit. It has to perfectly, and I mean perfectly, match the detailed records from your subledgers, which are like all those individual system monitors. Any tiny mismatch is a huge red flag that you have to investigate right away. First up is accounts payable and receivable. This is an old classic. The goal here is simple. Prove that the total amount of money you owe your suppliers and the total you're owed by your customers is exactly the same in the detailed subledger as it is in the general ledger. You'll use a program like SAP F190 for this, usually for your last complete fiscal year. And hey, pay attention to those common errors. A lot of the time, the problem isn't some deep, dark corruption. It's a simple configuration issue like a missing number range. Finding that now saves you a world of hurt down the road. Next, we dive into asset accounting. And for a lot of companies, this is a really big one. Yeah, of course, the goal is to make sure the value of every asset, from buildings down to laptops, is in perfect sync with the GL. But here's the really critical thing this check does. It verifies that your closing periods are aligned. In other words, do your asset module and your general ledger both agree on when the books are officially closed? If they don't, you have a major disconnect. So if you run that check and you see a message pop up that looks something like this, that is your signal. It means your asset closing process is totally out of sync with your main financial closing. Basically, one part of your system thinks the month is over and closed, and another part thinks it's still open. You absolutely have to fix this. Now, what's great about this specific problem is that the fix isn't some big mystery. This is a standard procedure. You follow these 4 steps in this exact order. First, run the fiscal year change. Then, you execute depreciation. After that, you run the year-end closing for assets. And finally, post any stragglers with ASKB. It's a specific recipe to get everything back in sync. And once you've done that, you guessed it, you go right back to our loop, rerun the check until it comes back clean. Okay, our last stop on the subledger tour, materials management. This is all about your inventory. The mission is simple. Prove that the financial value of all the stuff sitting on your warehouse shelves perfectly matches the value you have recorded in your general ledger. And you know what the most common culprit is here?
It's often something surprisingly basic, like the year-end balance carry-forward procedure just wasn't run correctly. A simple miss that causes a huge reconciliation problem.
Okay, so we've checked the core data, we've synced up all the subsystems, now it's time for the final major check, making sure all of your master logbooks, your ledgers, are telling the exact same story.
Now, this step is especially important for any company that's maintaining parallel ledgers for different accounting standards. Maybe you have one leading ledger for your global IFRS reporting and then a non-leading one for local GAAP rules. They might have different values, sure, but they have to be logically consistent and reconciled. So when you use a tool to compare them, you're on the hunt for any unexplained differences in the totals. Just like this asset value mismatch we're showing here. That's a showstopper. Everything has to balance and reconcile before you can even dream of migrating.
So, after all that, what does this actually mean for you and your project? Let's boil this all down into a simple blueprint for success, your go-live plan.
Look, these are the key things to remember. This is not just some technical checklist you can throw over the wall to the IT team. This is your plan for taking down the single biggest risk to your S/4HANA migration. It's about business data, and mastering that check, fix, rerun loop, that's the most important habit your entire team can build.
And at the end of the day, that's the one question all of these pre-flight checks are designed to answer. You're about to pour concrete for a skyscraper. You have to be absolutely certain the foundation you're pouring it on is flawless. Thanks for joining this explainer.